All right, welcome back everybody to the Simple Markets channel. My name is JB, and today we're going to be going over some of my more recent trades, and I just wanted to shout out the community real quick. We are up to 43 funded members now, and literally every single day I'm able to wake up to payout certificate after payout certificate, overall rewards, another payout certificate today. These last few were just today. I think, even in another section, another payout certificate. So I am super happy with how the strategy's been performing and everybody's been doing with it. Our funded rate is climbing ridiculously fast. Every day I'm waking up to new people getting funded too, and it has been a fantastic 2 months. I do have some data here. I myself have had a great 2 months as well. February and March have both been really good despite some small losing streaks in there. Obviously overall profitable data we can see with the equity curve here. And the last few weeks, a couple winners in a row, which does fantastic things for your equity curve. So for those of you that don't know, I do schedule my videos out, and I have gone back and kind of realized that I am quite behind on my trade reviews. I like to keep you guys up to date with my journal and the trades I'm going over, and it looks like my last video ended off on AUDUSD. So what I'm going to do is just break this up into a few pieces here. We're going to start with these three today. So NZDUSD, EuroCHF, and USDCHF. So those are going to be the three that we're going to go over for the strategy. So I'm going to be going over those three trades here, NZDUSD being the first one, and I apologize for all of the data that has since accumulated because I am a little late on my reviews here. So NZDUSD, very plain and simple here. We have our range that we are trading from the low to the high. We look for that break of structure, and then we have our fair value gap here and here. So all of the rules are met for me. Now, a common question I get is regarding liquidity. So yes, in my opinion, liquidity is quite a discretionary topic, but one of the main things I look for, especially when we are already in a trending market, is I don't need a significant or crazy liquidity sweep, but if I can see these very high volume and impulsive candles at the low, followed by a very bearish movement and then a very bullish movement right after with high volume, these are really good indications that institutions may be involved in this market on my side of price action. So as we can see here, I saw that with this very aggressive and impulsive candle at the low. I can mark out that little consolidation area and consider it a liquidity range. There is liquidity that rests below this general area of candles here with this low volume. A lot of orders will accumulate there. Price pushes through it very aggressively and then very aggressively bullish right after that. I use the term aggressive, impulsive a lot because I'm really trying to get across that point of high volume. In a market like the foreign exchange, of course, these institutions with a lot of capital compared to myself, compared to you, are able to push these markets and create these types of candles. So that is really the main goal here, is looking for that high volume and impulsiveness to really align yourself with the institutional involvement. And then we have our break of structure. So I set my order here at the trading range. Price works its way very slowly back into my entry. It taps me in, comes up just short of my break-even line here at 1 risk to reward, and then falls through for that -1 on the trade. So that is -1 risk to reward, the first of the three we're going to go over. Alright, now the second trade that we're going to go over here is EuroCHF, and this one's pretty self-explanatory. I was just looking at that very bearish trend that we saw formulating here. Prices making lower lows and lower highs all the way down, and then we get a nice and clear liquidity sweep with, once again, that very impulsive bullish move before the very aggressive bearish move. Seeing that high volume and the involvement to grab these equal highs of liquidity in the market, this consolidation area where, once again, we understand a lot of orders are accumulating, price break structure downward. I set my order here, it taps me in, we reach my 1RR break even line here, so all of my risk is taken off the trade, and then price reverses and actually takes me out at break even right about here. So once again, I use that break even rule because my data supports that it protects my capital, and in the long run gives me more capital preservation and prevents drawdown periods to be too significant. Of course, this is another scenario where we can see if I did not have the break even rule, I would have inevitably taken that ultimate loss. If some of you want to weather that storm and not use the break-even rule, you may take deeper drawdowns, but over the long run, you may see an increase in profit. I personally, from my data, have not, and I know a lot of students of mine would agree, but we can see here that it was another -1 position with a break-even in play. And last but not least, we are going to be going over USDCHF. So the first trade that we went over here was a -1. The second one was a 0 risk to reward because of the break even. So overall, we're down -1. And as you can see, that one winning trade that you just have to wait, keep the confidence in your trading plan, and set every order. And you can see USDCHF here wipes out all of that drawdown, and now I am in profit 2 risk to reward. But basically, same idea here. We see that overall bearish trend, and we look for that break of structure in the trading range. we have that huge fair value gap here, and I like to mark out my range with the highlighter tool to just be very simple with it. I take my fib level and I draw it from the high of the range to the low, just simply following those lower lows and lower highs that are being created in the market. Price works its way back up and in, taps me in, and then very, very quickly we end up reaching take profit here. So after that review, we can see that we are -1 on NZDUSD, we have a 0 on EuroCHF, and then we have a +3 on USDCHF for risk to reward. So we are overall up 2 risk to reward in this sequence. Now I have looked back at my journal, I see that there is a lot more trades than I anticipated that I do have to backfill in this review. So I actually decided I'm going to show EuroGBP as well, just so we can kind of work our way down this list a little bit more, and then I can save some of these for a future review. Now, EuroGBP, I'm excited to show this one because I got absolutely destroyed, and I know a lot of you guys like to see the transparency, and you actually message me and say you enjoy seeing a mentor that shows his losses and not just his winners. So this one, I got absolutely killed on. This was very simple, very straightforward. Once again, we have that bearish overall trend. We have the sweep on liquidity. We have the break of structure to the downside, and then 2 huge fair value gaps right around our entry level, which is great. Price then consolidates at the low a little bit, but then very quickly starts making its way towards my entry. I have gotten questions about this as well. If price is very aggressively moving towards my entry, I do not fear that. I do not pay attention to it because, in my opinion, one of 2 reasons. One, it is very discretionary and not something that can really be mechanically written as a rule. You know, very aggressive towards my entry. I'm not quite sure, you know, if you start getting into the idea of measuring pips or some type of volume level before your entry, I think you're getting a little too intricate with your system. And the second part is, in my back testing, I did not care for any type of aggression towards my entry, so I understand that long term I am going to have an edge over the market if I simply just execute the system, don't complicate it, don't make any unnecessary rules, or don't introduce any unnecessary fear into the markets. I take every trade as I see it if it follows the plan, and over the long term, as you guys can see, there is that profitable equity curve. So I saw price coming towards my entry, it ends up tapping me in here, and very quickly within that same candle destroys my stop loss there, and I end up taking another -1. So overall, in this sequence of 4 trades, I'm only up that 1 risk to reward. Now, you guys have seen many small sequences on my channel. Of course, not every 4 trade sequence you're going to be profitable. I've taken 4 trade losing streaks myself as well. But the goal is to show you that in that long term, as you start accumulating more and more data, you can see these deeper drawdown periods here, but very quickly after, simply 2 winning trades in a row, or even just a winner can come and wipe out many of those losses. I hope you guys appreciated the transparency in this video. I will definitely get to these other trades in a future one and do a review on those. Thank you all for watching again, and I will see you guys in next week's video.